I see so many traders getting lost trying too many different ICT strategies, overcomplicating them, and therefore not being able to get funded or of course grow their own personal accounts. Hence why in today's video, I will share with you what I think is the easiest and most efficient ICT strategy that you will be able to use in order to get funded or of course grow your personal account. I personally use this ICT strategy on a day-to-day basis, not only to grow my personal accounts or of course to get funded and trade the funded account, but to also send trades in my SMC trading group. And what I will do in today's video is I will firstly go over the strategy, what you need to know about it in order to be able to use it like I do. And secondly, I thought that the best way for you guys to fully understand it is to use the bar replay mode and go over the trades I sent during a full week. Trades that one of my members was able to take on his FTMO challenge, and with them he was able to pass it. I think he was able to pass that challenge in around 3 or 4 days if I'm not mistaken. So if that sounds interesting, let's hop on the charts. I will now go over the basics and the rules of this ICT strategy. First of all, we need to be able to understand the 3 following ICT concepts. Number 1, fair value gap, or of course imbalance. Number 2, liquidity. We need to be able to know where liquidity is sitting in the markets and to be able to identify liquidity sweeps. And the third one, supply and demand. Now, before I continue with the video, I briefly wanted to mention that if you want to get access to the trades I am taking on a daily basis, you should go ahead and join my SMC trading group. It is the first link down below in the video description. Let me show you what I am looking for. The first thing, okay, let's say the market is moving towards the upside, it's in an uptrend. The first thing that I want to look for is an aggressive break of structure, right? And of course, you need to know how to read market structure as well. But I assume that if you already know how to identify a imbalance, a liquidity sweep, or a supply and demand level, you already know how to read market structure as well. So like I said, the first thing that I'm looking for is a aggressive break of structure. What do I mean by aggressive? By aggressive, I mean a break of structure to the up or of course to the downside that leaves imbalance behind, that leaves a fair value gap behind. That's the first step of the strategy. If we only have a break that has no imbalance, no fair value gap, then that break of structure right there is not the one I am looking for, and I will wait for a new one. So this first step is very important. You need to have a break of structure, yes, but that break of structure needs to be aggressive. The second step is to look to the left in a bullish scenario and try to see whether liquidity was swept before the break of structure. Okay, that's the second step. And if the answer to that is yes, then you can move forward to the third and final step. So first of all, we need to have an aggressive break that leaves imbalance behind. And secondly, after the break of structure, you look to the left to see whether price swept liquidity or not. And the reason I am not firstly looking for the liquidity sweep and then for the break is because a liquidity sweep is not valid until price breaks structure in the opposite direction. All right, it is very important for you to understand it, because let's say the price is around here, okay, and I would say that, oh, we have a liquidity sweep, we have a fake out to the downside right here, liquidity was swept below this low. Yes, you might be right, but until this high here is broken, I'm not 100% certain that this right here is a liquidity sweep, because price from here could then go lower. Okay, and that means that this right here wasn't a liquidity sweep. That's why it is very important for firstly to look for a break of structure that leaves imbalance behind, and secondly look for a liquidity sweep to the left. So now, if you have a break of structure with imbalance as well as a liquidity sweep, we will move on to the third and final step, which will be to identify a supply, a unmitigated supply or demand level. In this case, we will have to identify a unmitigated demand level, which would probably be in around this area here. Okay, so let's say somewhere around here, depending on where the imbalance is at. That will be the third and final step. And of course, after that, you will place the buy limit on it. stop loss right below the demand, and the last take profit would be at 3RR. Okay, and now let's quickly go over the bearish example. So let's say we are in a downtrend. First thing that we are looking for is a aggressive break of structure. Once again, how do we know it is aggressive? Well, it has to leave imbalance behind. After that, we look left and see whether price swept liquidity or not. In this case, it did. And the third and final step would be for us to identify the point of origin. Okay, that's how I like to call it. The unmitigated supply or demand level are essentially the points of origin, where the bullish or the bearish momentum kicked in the market and took the price higher or lower. And in this case, it will be a unmitigated supply. After that, after identifying the unmitigated supply, I will then place a sell limit on it, stop loss right above it, and then the last target would be at 1 to 3 risk to reward ratio. All right. So now that I went over the rules, I will now hop on the chart and use the bar replay mode and go over the trades I sent during a week that, like I said, one of my members took on his FTMO challenge, and with them, he was able to pass that challenge in around 3 or 4 days. So let's get right into it. All right, so before I go over the first example, make sure you are subscribed to not miss out on any future uploads. And here, the first thing that I saw when I opened the chart was that price was intraday bearish. We can see that it was constantly breaking structure and heading lower, all right? And knowing that, I was more keen to look for a bearish setup. So the first thing that I looked for was to see whether we have a aggressive break of structure. And right here, I saw that we had a aggressive break of structure. Why was it aggressive? Because if we look closely, we have a fair value gap right here. After that, I looked left to see whether we have a liquidity sweep. And the answer to that was yes. Right above this high, price went higher, grabbed the liquidity, and immediately after that it broke structure to the downside impulsively, right? And now the third and final step was for me to identify the point of origin, which in this case was this unmitigated supply level right here. I then placed the sell limit right on this supply, on this point of origin, stop loss right above it. And of course, like I said, I've sent it in my SMC trading group. The last target was around here, 1 to 3. And of course, now I will attach a picture on the screen to see exactly when this trade was sent. And now let's play the price and see how it played out. Right here, it triggered for a very beautiful sniper reaction. And immediately after that, with the second candle, it smashed all the targets. And yeah, I will now attach a picture on the screen to show you when I updated that this trade smashed all of the targets. And this was the first trade out of the 6 I will go over. Right now, let's get into the second trade. The second trade was on AUDUSD. And right here, once again, the first thing that I saw was that price was intraday bearish. Okay, we can see that it broke multiple levels of structure. It even broke this structure from here, which I consider to be important, because if we look closely right here, this was the initial push of this whole move right here. So this level right here was pretty important. I checked it on the 30-minute as well, and it was an important level over there, hence why I was paying attention to it. So knowing that it was breaking structure to the downside, I then asked myself, okay, is the break of structure aggressive or not? And the answer to that was yes, it was aggressive, because right here we can see that we have fair value gaps over fair value gaps. We have a fair value gap here as well. Let's see, where do we have another one? We have a fair value gap here as well. All right, we had plenty of fair value gaps. So knowing that, I then look left to see whether liquidity was swept as well. Right here, liquidity was swept above this high. And if we look to the left, liquidity was swept as well right here. And liquidity was swept also right here, okay? Because price essentially went higher, and this whole move right here was a big fake out. That's how I look at it. Because after that, price showed its true intentions and broke structure to the downside. So now if we know that we have a aggressive break and also a liquidity sweep, the final step was for me to identify the unmitigated supply. And firstly, I looked at these candles here and they were all mitigated. All right, the only unmitigated supply was this candle right here. Okay, so I took this as my point of origin. I placed the sell limit right on it. And of course, I've sent it in my SMC trading group as well. Stop loss was right there. And the last take profit at 1 to 3. Now, of course, let's play the price and see how this trade played out. And of course, feel free to let me know in the comments section if there's any unclarities about this strategy. And also feel free to join the SMC trading group. It is the first link down below in the video description. Right here, we can see that we smashed the take profit. It wasn't as fast as the gold trade we firstly went over, but nonetheless, it was a beautiful trade that smashed all of the targets. Now let's go over the third one. The third trade will be on AUDUSD as well. This time though, it's gonna be a buy limit. So right here, what can we see straight from the get-go? We can see that price is intraday bullish. It had a shift in momentum right here. It broke structure to the upside and it continues to do so. Okay, we are breaking multiple levels of structure and we are heading towards the upside. Okay, that's the first thing that I'm seeing. Now, the second thing, I asked myself, is the break of structure aggressive? Do we have imbalance that is left behind? Do we have fair value gaps? And the answer to that is yes. The first fair value gap I'm spotting is right here. The second fair value gap is right here. And the third fair value gap is right here. Now, I asked myself, I look to the left side and see, was liquidity was swept? The answer to that is yes, liquidity was swept right here. Okay, with this fake out and also right here. So far everything looks valid. Now the third and final step was for me to identify the point of origin. And in this case, I remember there were two valid points of origin, but only one of them triggered. So the first one was this one up here, very clear to see it. And the second one was this one right here. Both of them unmitigated demand levels, okay? After that, I placed the buy limit right on it. Okay, this was the first one that also triggered, and the stop loss right below. And then the final target, like I said, at 3R as per usual. And I sent it in my SMC trading group as well. We can play the price and see what happened. Right here, it triggered, faced a bit of drawdown, but then it reversed. And then it smashed TP1, TP2, and TP3 with this huge M15 bullish candle. All right, I hope everything is clear so far. Now, let's get into the next trade. This trade was on gold. And when I opened the chart at around this time, the first thing that I saw was that gold was intraday bullish. We had this beautiful break of structure right here. We had this bullish shift in momentum, change of character. Okay, we had a fake out right here to the downside, and then we moved to the upside. So after seeing that gold was intraday bullish, I asked myself whether this break of structure was an aggressive one or not. And the answer to that was it was. It was aggressive because we had this beautiful fair value gap right here. After that, very simple, I was able to identify this liquidity sweep here as well. This was an extremely textbook setup. And the last step was for me to identify the unmitigated demand level, the point of origin, which was this one right here. I then placed the buy limit right on it, stop loss below it, and sent it in my SMC trading group. And now we can play the price and see how it played out. It triggered right here, good initial sniper reaction, and then with some very big bullish momentum, it went straight to the upside and smashed all of our targets. This setup on US30 isn't as textbook as the previous ones. Hence why I really wanted to discuss about this one as well. So right here, I know the price is looking very, very bearish overall. Okay, we can see that we had this massive break towards the downside, but because I spotted this huge imbalance here, in my mind, I thought that soon it should get filled. All right. And because of that, I was pretty keen to look for a bullish setup as well, even though price was overall bearish. So knowing that, I asked myself, okay, what do we have here? And the first thing that I saw was a break of structure right here. It's a minor break of structure, I know. It's not a major one as the previous ones. It's a minor break of structure right here. I then asked myself, okay, is this a aggressive break? And I zoomed in and I saw that there was a small fair value gap here. So for me, that right there is still a aggressive break. No matter how small the fair value gap is, if there is one, I will take it. Okay, so knowing that the break was aggressive, I then looked to the left to see whether we had a liquidity sweep as well. And the answer to that was yes, we had a liquidity sweep here as well. So we have a liquidity sweep followed by a aggressive break. I then was able to identify the point of origin, this unmitigated demand level, and I placed the buy limit right on it. Okay, stop loss of course below, and the last target at 3 risk to reward ratio. And of course this trade was sent in my SMC trading group as well. Right here it triggered, faced some drawdown for sure, but then it reversed and it smashed all the targets right here with this huge wick. Then of course my main thesis wasn't really respected because this imbalance wasn't filled, but it didn't matter because we were already out of the trade because it smashed all of the targets. So yeah, I really hope you guys were able to understand this example. And now let's move on to the sixth and final example. The final trade example will be on US30. And right here intraday, I saw that price was looking pretty bullish. It was heading higher and higher. I also saw that it broke this lower high here, which was a pretty important level for me, okay? Because this pretty much signaled the change of character, the shift in momentum. Because yes, these breaks of structure right here are also valid, but they're not as important as this break of structure right here, all right? Because these ones here, they didn't break any major level of structure. They just continued this already started upwards push. So knowing that we have these breaks of structure and we also have this major one here, I asked myself, okay, do we have imbalance that was left behind? And the answer to that was yes. We had fair value gaps right here. We had it right here. And we also had it right here. Okay, so it is definitely an aggressive move. After that, I looked to the left to see whether we had a liquidity sweep. And the answer to that was yes, we had this fake out to the downside that grabbed liquidity, that swept liquidity before moving into the right direction. And knowing that the liquidity sweep was right here, I was more keen to look for a point of origin in this area rather than this area up here. Why? Mainly because of this break of structure. I wanted to know the point of origin that caused this break of structure. So because of that, I looked closely and I identified it. There were 2 points of origin, but once again, I think only one of them triggered here. And the first one was this one here, this unmitigated demand. And the second one was this one right here. Okay, both of them were valid. And after that, I placed the buy limit. I placed the buy limit on the first demand, which was right here. The stop loss was right below it, which was around here. And then of course at 3R was the final target. And I've sent it in my SMC training group as well. Now we can play the price and see how it played out. Right here, check this out. It triggered for a very, very beautiful sniper entry. Literally tapped into it and then went straight to the upside, smashed TP1 and TP2. And then with the next candle, it smashed TP3 as well. All right. So yeah, these are the trades that were sent in a week in my SMC trading group. Trades that one of my members took on his FTMO challenge, and with them, he was able to pass that challenge. And I think he was able to do it within a very short period of time, in around 3 or 4 days. All right. So if you like what you see, like I said, make sure to subscribe to not miss out on any future uploads. Let me know down below if there's any unclarities on this strategy. I really hope y'all found it insightful. Like I said, it's a very easy and efficient strategy, in my opinion, that everyone can use. And till the next video, a very important one will pop on the screen right now. A video where I share 6 things that I wish I knew when I started trading, that if I would have, my journey towards profitability would have definitely been a easier one. So yeah, on that note, I want to wish you all the best and see ya in the next upload. Take care.